let's talk about 10 stock sell signals. In case you are an investor in the stock market, there are those moments where you might need to sell your stock, not because you want to invest for the long term, but because conditions are dictating that you are supposed to sell your stock for it to be in good standards. That is what I want to talk about in this video. 10 stock sell signals which you as an investor need to be aware of so as to be able to trigger them in case you see any of these signals. In case you are new here, my name is Afagza Sifunam. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button for you to subscribe to my channel, and I will still add it. Drop a like on this video. Thank you for subscribing and liking this video. And by the way, I also recently released an ebook on how to build a portfolio step by step, and most importantly, how to review your portfolio occasionally to ensure the stocks you have in your portfolio are serving your purpose. In case you are interested in getting that particular ebook, I'll put a link down below in the description and also in the comment section. Go and check it out. You'll really enjoy. Having said that, the very first sell signal you need to be monitoring is if companies' fundamentals have deteriorated. What do I mean? When you are investing as an investor, of course, you typically do technical analysis from time to time. And also, it is important for you to do fundamental analysis from time to time. Of course, technical aspect, you look at a trend on the share price in the market, right? But fundamental, you need to be looking at the records of the company. What is the records of the company is telling you? Like, for example, the earnings, revenue, right? Its profit, right? Look at its levels of debt, right? Look at EPS and all the other metrics relating to you investing in a given stock. In case these indicators have really deteriorated over time, it could be a signal for you to sell. Case in point, if a company has been getting losses for the past 5 years and is continuing to be on a downward trend, getting losses, loss after loss, that might be a signal that you are supposed to sell. You don't need to continue holding or flogging a dead horse just because you are afraid of changing your position. If fundamentals are not supporting your position, then you might need to sell. And then the second reason or signal which might make you sell is in case the original reason you bought a given stock no longer exists. You know, out here we all purchase stocks for a given reason. Maybe because we are aiming for growth stock, right? Maybe we want to get dividends. Maybe we are aiming to invest in some stocks which can assist us retire in peace and so forth. All these are reasons as to why we might be investing in given stocks, or even you are investing maybe in a given dividend stock to be able to unlock school fees for next year through dividend payout. So, in case the original reason as to why you invested in a given stock no longer exists, that might make you also change your mind. And there's nothing wrong with that, because if a given stock, holding a given stock, is not contributing anything to your investment thesis, then changing your mind is nothing bad. It is absolutely okay for you to change your mind, reason being the investment thesis which you were having before has changed. And then the third reason or signal which you need to be looking out for is in case a stock becomes extremely overvalued. That is a risky thing for you as an investor in case a stock becomes extremely overvalued. Overvalued at the market basically means after some time, once the fundamentals kick in, its true value or intrinsic value is going to make a given stock to have share depreciation. Simply put, its price is going to come down. And you as an investor, you'll end up losing out, because if a stock plummets in price, it means you're going to see your capital really get deteriorated. That is why when you see, for example, a stock become extremely overvalued and there is no signal of any positive, maybe fundamentals relating to the company coming in the near future, that could be a sign for you to get out of that particular position. Because you continue to hold, it only means once the stock in the market adjusts price to its intrinsic value, you'll end up losing big time. And then the fourth reason as to why you might consider selling is in case you get a better investment opportunity. Guys, investment is a game, right? We are all aiming to preserve our capital and also hopefully get a return, whether it is through share price appreciation, in case of other forms of investment, maybe interest, maybe rental income, you name it. So in case you get an alternative investment which is better, okay? And then the better investment which you get is gonna be able to assist you get a better return compared to continuing to hold a position in a given stock, then there's nothing wrong with you changing your mind. Because you changing your mind is gonna basically ensure you are able to gain more. That is why in case you get a better investment opportunity, sometimes you might end up selling a given stock to unlock capital for you to invest in that particular new investment opportunity. But then again, also do that after factoring in everything, right? The foregone share price appreciation, the foregone dividends, and the costs of the transaction. Do that entire math, and if the new opportunity has better returns, then you might need to trigger that particular sell for you to be able to unlock capital. And then the fifth reason as to why you might end up selling a given stock is in case earnings keep missing their expectations. You investing in a given business, you are aiming for two things in the stock market: share price appreciation, which of course is anchored on investor sentiments, and also possibility of you getting dividends. So in case earnings of a company are consistently missing their expectations, they are bound to affect these two matrices, both the potential of the share price appreciating and you getting a dividend. That is why you need to really also reflect and try to see if the earnings are really assisting you towards your investment journey and getting a return. Because if a company is missing its earning expectation year in, year out, or quarter on quarter, at the end, you'll end up seeing the share price depreciate, and also you'll miss out on dividend, because if a company is not making profit, they can't be able to pay you dividend. That is why in case that's the case, sometimes it is good to change that position before things become bad, or even so, before you see your capital depreciate big time. And then the sixth signal which might make you sell is in case management loses investors' confidence. In case management loses investors' confidence, that's going to be a very big negative signal to the market, and you're going to see the share price come down. That is why in case, for example, a company doesn't have stable management, they are consistently changing management, okay? Or even so, management is embroiled in court cases back to back. That is a bad signal for that particular stock, because whatever is happening on the end of legal or regulation, you name it, also it's going to trickle down to the performance of the stock in the market. Even if it doesn't hit right now, be sure in the near future it's going to hit, because the market hates uncertainty. And if there's uncertainty at the management level, that is a very high level of uncertainty. And that could merit you even selling a given stock just to avoid the dynamics which are going to come with that loss in confidence in the management of a given company. Given management are the ones who are entrusted to grow shareholders' wealth. And then the seventh signal could be in case a business faces permanent industry changes. Guys, sometimes things happen out here and businesses struggle, they can't thrive. Case in point, in case there's very big industry change, maybe related to regulatory or even a new disruptive entrant, which is really getting a big share of the market share, that could be a signal for you to sell a given stock. Because you continue to hold, you're going to be fighting against a position which is already cast. You won't be able to turn around the position. And if the company itself doesn't have a plan to fix whatever is happening, because it's an industry dynamic beyond the company, case in point, change in regulations which is affecting the company in a way that's putting it at a disadvantage. Maybe there's a new entrant which is really disrupting the business. You continue to hold that particular stock is going to mean you'll also start struggling with the company, because the share price is going to depreciate and you'll end up losing, okay? And then the eighth signal which can make you sell a given stock is in case your portfolio has become too concentrated. What do I mean? Over time, because of either our buying behaviors, okay, or because of even different share prices changing over time, we might have a situation called concentration in the portfolio. Simply put, one stock might have a very huge holding in a given portfolio to the extent that it becomes risky, right? Maybe you started at 30% holding on a given stock. What if it grows to 80%? That is a good thing, it has grown. But then again, in case something happens to the 80% value in your portfolio, it means you'll end up losing big time. That is why in case of that situation where there's concentration, you as a person who's holding stocks of several companies, you might decide to sell some of them just to rebalance your portfolio. Not because it is bad, but because you are also mitigating risk. So that could also be a signal for you to sell a given stock. And then the ninth signal which might make you sell a given stock is in case you need money for a given financial goal. Case in point, maybe you need money to buy a home, right? Maybe you need money for education. It could be whichever financial goal out there. It might make you sell a given stock to be able to unlock money. There is nothing wrong with that. Of course, the pecking order of your goals. Some goals are higher compared to others. So in case you need money and the stock selling gives you an option of getting that particular money, there is nothing wrong with that. You might sell for you to be able to unlock money, to be able to achieve a given financial goal which you've been pursuing, and you think time is ripe for you to achieve it. And then the 10th signal is in case your stock has hit your pre-planned exit strategy. Out here, as investors are investing, they are also investing based on a given strategy. Maybe they know the maximum quantity of loss they can accommodate, right? Maybe they know the maximum profit they are aiming for them to take out their profit. So in case a stock has hit a given predetermined level, also there's nothing wrong with you selling a given stock, not because it is bad, but because you've already achieved your goal and you have another trajectory which you want to pursue. So in case it's already premeditated, you want to cash out at a given point in time, you execute because that's your plan. You don't need to conform to any other realities out there or even continue to hold for the longest in case that isn't your strategy. Guys, those are the 10 signals which could assist you know if you need to sell a stock or not. What do you think about these signals? I hope you got a thing or two which is going to assist you in your journey towards buying and selling stocks. Cheers. Look forward to share with you other amazing videos next time.